Yep. And then
Okay, why don't we get started? What an amazing day this is going to be, and I really appreciate everyone's attention and participation in this. I think, as I've told Governor Barr, I think these are very consequential moments, and especially the case with this Fed Listens project. So, what I was thinking about as I was walking in here, I remember, and I'm sure many of our moms would say, you have 2 ears and one mouth for a reason. You should be listening twice as much as you're speaking, and that's really what this is about. And so I really believe this to be much more of a dialogue than a monologue, and that's why we're up here. So I'll, on behalf of the 10th District and the Federal Reserve System, I want to officially welcome all of you. Thank you for joining us for this Fed Listen session. We are very privileged and happy to welcome Governor Michael Barr to this session. I would give you a few of my personal comments about Governor Barr quickly. He and I met about 2 years ago when I was when I was selected and went to Washington to explore this job as president of the Federal Reserve Bank of Kansas City. It struck me not only, and you probably have seen Governor Barr's bio, but working with folks like Governor Barr is just every day a joy, because I mean his experience not only as an academic and a scholar, but an author, and his focus on things like safe banks and trying to deliver financial services to low to moderate communities is something I really appreciate, and something I've tried to do as a practicing banker and a bank examiner in my background. So the connection is real. We are very pleased to have him here because I think he lends so much to this Fed Listens process. So on behalf of the 10th District, we're really happy to have you, not only in the district, but in Omaha, where I feel land of me birth, right? So I feel always at home here at the Omaha Bank for the Federal Reserve. This Reserve Bank helped me build banking businesses and helped me make connections to communities all over the region. So I have a very personal interest in the activities of the Federal Reserve in this district, but also particularly in Nebraska. So a little bit of background: the Fed Listens sessions were created in 2019 as an opportunity for Fed governors to engage with a wide range of audiences across the United States about the impact monetary policy is having on local communities, businesses, and your families. The programs were an important part of the Fed's first comprehensive and public review of the monetary policy framework that is used in pursuit of our goals of maximum employment and price stability. That the last review concluded in 2020 with the release of a revised statement of longer-term goals and monetary policy strategy, which is actually the foundation of the FOMC committee's policy actions. At that time, Fed also said that it was intended to conduct a regular review of monetary policy strategy tools and communication practices roughly every 5 years. So that's a big part of why we're here today. Last November, the Fed followed through on this commitment, announcing a second policy framework review, which should conclude later this summer. It is focused on two specific areas: the Federal Open Market Committee's statement on longer run goals and monetary policy strategy, which is the committee's approach to monetary policy, and then the committee's policy communication tools. This Fed Listen session is the 9th of 10 sessions being held across the United States in conjunction with this review. It is one of 3 events this week. On Friday, Governor Barr will be in Cleveland for a similar session there. While today is a special event and we are happy to bring Governor Barr to Omaha, we also hope that you recognize that the Federal Reserve is here in Omaha serving the community and more than 2 million Nebraskans every day. The Kansas City Fed and its branches in Omaha, Denver, and Oklahoma City are the direct connection to our nation's central bank for the 7 states of the 10th Federal Reserve District. We host any number of events across our region focused on a wide range of economic issues. Some of you will attend dinner this evening. Our agricultural summit will kick off tonight and then tomorrow, which is really a capstone of a lot of efforts in the agricultural economy that Nate Kaufman and his team really deliver all year. So with that, I want to introduce Nate Kaufman, who is the executive in charge of the bank here in Omaha, and is really not just a 10th district expert, but really has become a system-wide expert in the field of agriculture economy. So if you're not acquainted with Nate, I would encourage you to get to know him and his team, along with Joe Gruber is here, our chief economist. We have experts throughout the district that I think can really help you. I mean, I think about it when I was in banking. You have to be an amateur economist to be a good banker. Otherwise, your bank will not flourish. And I constantly use the resources of the 10th district economists to really get a sense of where the economy is going locally, regionally, and nationally. It's really imperative to run a great bank. So I want to thank you, Nate, for doing this. Do you want to open this thing with a couple comments, and then we'll toss it over to Governor Barr?
Sure, I'd be glad to be able to do that. And President Schmid, thank you for providing some introductory comments there. We are pleased to host this program of Fed Listens in Omaha. And as Jeff mentioned, this is the Omaha branch serves the state of Nebraska within the 10th Federal Reserve District. And my job here at the branch is to serve as the branch executive, responsible providing for some of that voice that comes from Nebraska, which of course is a state and a region of the country that has a heavy agricultural concentration. So we'll get into that a little bit more and talk about some of the trends of what we're seeing with respect to agriculture and the important lessons that we can learn from that industry as it relates to broadly monetary policy and economic discussions that are happening. So pleased to be able to do this afternoon, and thank you to the panelists also for joining. So I'll turn it over to Governor Barr to then provide some comments.
So Governor Barr, thank you very much for hosting this Fed Listens tour. It's great having you. We took him to the Drover last night for a massive whiskey ribeye, and it was delightful for him to see a little bit of that side of Omaha, Nebraska. And it's really a pleasure to be your colleague on the FOMC. And thanks for hosting and leading this event. So thank you. It's all yours.
Thank you so much, President Schmid, for the warm introduction and also for the warm embrace that you've given me and your staff have given me in my visit first to Kansas City and now here in Omaha. And looking forward to the event today and then the agricultural summit that you're hosting tonight and tomorrow. It's a wonderful opportunity for me to learn what's going on around the country. I have some brief opening remarks, and then, as Jeff said, we're mostly here to listen, so we look forward to that very much. The Federal Reserve, with its system of 12 distinct regional Federal Reserve banks and the Board of Governors in Washington, D.C., was designed to ensure that monetary policy was a national decision with input from all parts of the country. The work of the district reserve banks and events like this one make sure that a wide range of views can inform President Schmid, me, Federal Reserve Chair Jerome Powell, and all of our colleagues on the Federal Open Market Committee as we come together in Washington to set monetary policy. Let me spend just a brief moment on the economy and the outlook. The economy is currently on a sound footing, with low and steady unemployment and disinflation having continued at a gradual, albeit uneven pace toward our 2% target. Looking forward, however, I expect inflation to rise due to tariffs. Higher short-term inflation expectations, supply chain adjustments, and second-round effects may cause some inflation persistence. At the same time, tariffs may cause the economy to slow and unemployment to rise. There is still considerable uncertainty about tariff policies and their effects. Monetary policy is well positioned to allow us to wait and see how economic conditions unfold. The broad objectives of monetary policy are clear and have been mandated by Congress: maximum employment and stable prices. Our strategy for getting there is laid out in the Fed's policy framework, which we plan to update later this year. And setting that strategy to reach our goals is informed by outreach sessions like the one today. Monetary policy decisions affect everyone. Stable prices are important for families and businesses to be able to plan for the future and for sustainable and healthy labor markets. When we get it right, we can help foster broad and inclusive employment gains that benefit the American people. Our decisions play a role, for example, in the prices for agricultural commodities that are particularly important for business and consumers in this region. These decisions affect the labor market, including the challenges that businesses can find in finding qualified workers, which I know is a bigger issue in Nebraska with lower unemployment than in some places. But the Federal Reserve's role is a limited one. Most of what affects the economy are the individual decisions of businesses and households. The primary tool for monetary policy is short-term interest rates, which in turn can affect longer-term rates that you, your customers, and people in your communities pay to finance land and equipment and other inputs. Credit has always been particularly important in agriculture, and so I know that interest rates matter a lot in this part of America. Let me emphasize that real-world rates are significantly affected by other forces in the economy too, but Fed policy plays an important role. Monetary policy sometimes requires trade-offs. A stance of policy that is necessary to lower inflation, for example, may also lower aggregate demand and slow the economy. Crucial in balancing our economic goals is determining how policy decisions affect households and businesses, which is why we're here to listen to you. Businesses also have to balance their goals. Producers need to judge the strength of demand for their products and services, the trends in costs for their inputs, and the expected future costs for credit. These and other factors affect how businesses see trade-offs as they make decisions about expanding operations and hiring. Workers also need to balance their prospects for their wages keeping up with inflation, or whether it's worth moving to find a better job. Your experience and the experience of your customers and the other people you serve is an important input into the strategy the Fed will decide on for our long-term monetary policy framework. We're going to consider everything we've learned in the past 5 eventful years since we last updated our framework, and we have learned a lot. But we can't do it without you, because you are who we serve. And so, since listening requires that one stop talking, I'm going to wrap up by thanking everyone from the Omaha area and across the 10th District for agreeing to be part of today's gathering. I look forward to hearing what you have to say.
Well, thank you, Governor Barr, for that introduction. And once again, thank you to our panelists that have come to participate in this Fed Listens event. We do look forward to engaging with all of you. And as was mentioned, we will be hosting, starting tonight, an event that is focused on developments in agriculture, and we'll learn a lot more about some of those factors that are driving either growth or potentially constraints in those industries. We'd like to start first with some introductions, and then we'll get into our discussion a little bit this afternoon. And so I'll turn to each of you in turn just to introduce yourself and say a little bit about where you're from and your business. And so Brandon, I will start first with you. And Brandon Honeycutt is the owner and partner of Honeycutt Farms located in Giltner, Nebraska. Thank you, Brandon.
Thanks, Nate. As Nate mentioned, Honeycutt Farms, Giltner, Nebraska, about 2 hours west of Omaha, where I farm with my dad and my brother. We farm about 2,400 acres, corn, soybeans, popcorn, everything's irrigated. 5th generation on the farm. When I'm not farming, I also chair the Nebraska Corn Checkoff Board, as well as involved in some other things, both at a state and national level. Back to you, Nate.
Thank you, Brandon. And next is Sherry Rogie-Fiddler, who is President and Chief Executive Officer of Farm Foundation, but also, coincidentally, a 5th generation farmer located in Southeast Nebraska. So Sherry, I'll turn it to you.
Great. Thank you. Thank you for the invitation to be here. I'm looking forward to listening and the conversation as well. It is my joy to have the roles that I have, and it's a deep joy, and that's important for me to say because I will be saying some darker stuff as we move forward. But the deep joy transcends where we are and some of the darkness that I might be sharing as we go forward. But as Nate said, I am a fifth-generation farm owner and operator. We farm around Auburn, Nebraska, and we're getting ready to transition to our sixth generation. And one of them wants to grow some of the stuff you are, so we might need to ship someone out to learn from you. But then the other role that I play that Nate mentioned is CEO of Farm Foundation. For those of you who don't know Farm Foundation, we're a 92-year-old organization. We were the first Ag Policy Institute set up in the U.S. about the same time as the USDA and the Farm Bill. We've over time evolved to be a think tank, do tank. And we're especially leaning into that do tank piece right now, feeling that it's a leadership moment for us to step in and do more stuff. So looking forward to the conversation.
Thanks, Sherry, and thank you for coming. Next up, we have Paul Mace, who is the CEO of Schooler, based here in Omaha.
Thank you, Nate. Paul Mace, I lead Schooler, which is a privately held company in the agriculture industry, 133 years in business. Think of us as a supply chain. We buy from farmers grain and get it to end users the most efficient way possible. That's the core of our business. We've expanded into some other areas, but been leading the company for about 9 years, and we look forward to the discussion today.
And Paul, thank you also for your service on our board of directors at our Kansas City office. I appreciate you doing that as well. And then, and last but not least, Krista Prince is the president of Citizens State Bank based in Wisner.
Thank you, Nate. Thank you again for having me here today. I'm Krista Prince, Citizens State Bank of Wisner. I've been with the bank about 16 years. We have 10 locations in the eastern half of Nebraska. We're about a $600 million agriculturally focused bank. We have diversified with locations in the Omaha metro area. I'm also very involved in agriculture personally, as we personally farm and have a cattle feeding operation near West Point, and grew up and was raised in cattle feeding and farming as well. So obviously farming and agriculture affects all parts of my life. So again, thank you for having me today.
Thank you, Krista. And again, thanks to the panelists for joining and taking your time here this afternoon. We know that your time is precious to you, and you have many other commitments of things to respond to on any given day. So we appreciate you joining for this Fed Listen session, which really is intended for us to be able to ask some questions of all of you and get to learn a little bit. And some of these questions will be quite open-ended, but there may be some opportunities for some follow-up questions as well, just as we engage in some things that might be a bit more free-flowing in this discussion. We'll start with some things that are fairly big picture, and I'll start down there, Brandon, with you and invite you to provide some comments, and then Sherry, and then we'll go this way. And then we'll ask some questions here, but just be very curious to your responses. So the first question, just to get us started, this will be very big picture on some general trends of what you're observing. You all represent slightly different industries, and most of you also representing different regions of the state. But want to start with a question from the perspective of the industry that you do represent, or the organization that you might represent, or your region. What are some of the most significant trends that you see shaping the agricultural economy, and how do you see those trends evolving over the course of the next 5 years? What might be some specific elements that you would point to describe your outlook, and then maybe even more specifically as we look further out, some of those things that evolve over time? So Brandon, I'll start first with you, and then Sherry next.
Yeah, I think from the area of Nebraska I'm in, we're heavy corn. We're heavy corn. There's some soybeans. There's some other popcorn, some other crops grown, not very much in the way of cattle. But I think our biggest trend is trying to figure out what we're going to do with the giant pile of corn that it looks like we have and Brazil has. And at the same time, prices are tanking on us as fast as and that doesn't make any sense, and a lot of issues. But I think that the challenge is going to be for us as we're looking forward here is what do we do, as I mentioned, with the big pile of corn, but at the same time, we're losing farmers. Farmers are in a very bad headspace right now. To be fully honest, there's a lot of them that are just, they don't know what to do. They're stressed. Prices are terrible. Input prices are high. And I'll kind of lead it into this way. I went back and looked at what the price of a planter, tractor, sprayer, and combine were about the time I started farming, which is about 2000. I think the combine's 4 times higher, planters 2.5, tractors 3 times, sprayers roughly 3 times. And the price we're getting per bushel, if you adjust it for inflation and based on current prices, is not much different. And so we're trying to have to out yield what our prices are doing. That being said, in the next 5 years, we've got to do something about ethanol policy in the United States. We've got to do something about, when they talk ethanol policy, E15, sustainable aviation fuel, those things that will keep us surviving. In my area, one of the advantages we have is we have the CO2 pipeline going in, so every ethanol plant is connected to the carbon pipeline. So that's keeping our prices right now up with all those ethanol plants. But I think the challenge is going to be, where does this take us? Where does this take farming, as trying to transition farms, or farmers are deciding to exit the industry? And as they do that, farms become bigger and bigger, which ultimately has a negative effect on rural economies. We don't have the labor force out there, so how do we manage that? The labor force we do have is getting older. There's all these challenges in front of us in the next 5 years. Some of it's around monetary policy, but a lot of it's just basic economics on the farm. How are we going to survive this in 5 years? A couple of us have talked 2 to 3 years is going to be a nightmare in the ag industry. I think it's going to be 5+ now, just because we were holding hope out for a drought this year. And I'm going to say it kind of promised us a drought back in March, and that didn't come to fruition. I mean, I know it's only June, but it looks like we're going to raise a record crop. And the way down here, somebody said Brazil's crop, their second corn crop, is going to be a record. They missed their projections badly, and so they're way higher. So how does this look long term? So those are the things that we're thinking about. And then at the same time, shift to the checkoff side. We're putting a penny checkoff on every bushel produced in Nebraska, and then how can we invest that to make sure we have places for that corn to go in the future, to make sure that there is the next generation around for that. So yeah, it's in my estimation, kind of where we're at. It's kind of negative. Maybe I shouldn't have been listening to my buddies on the way down here, but that didn't help really set the mood for where we're at right now.
Brandon, thanks for that. And we will get more into financial implications and credit and some of those other factors as well, but appreciate you starting that off just to kind of set the tone, even if it is a little bit more downbeat. Sherry, I'll turn to you next.
Not going to be a whole lot more upbeat, but I might say one or two things that are a little upbeat. For most of this question, I'm going to take more of the Farm Foundation perspective, because as I prepared and listened to more of our participants and farmers across the Kansas City Federal Reserve region, it was very different from my own perspective on our farm. And I think that's important, to do more of that landscape view, like the astronaut looking back at Earth sometimes. And as I do that, I try to also do like red, yellow, green in terms of which ones I think are good or bad. And I do at least have one green one, so that's a good thing. And as I looked at these, I've got 5, and I'm going to keep them very short and hope that we come back to some of them later. But it feels very much to me, with this landscape view, that we're entering a new era in many ways, and some new paradigms. And I think that's very significant, but in some of them, we're just starting them. So it may not be very clear what the direction will be of these. But the 5 I want to highlight in terms of trends are, first, clear that we all read the news and listen to the news. Change in domestic policy, significant, right? And that one I have yellow, and I should have said we are nonpartisan at Farm Foundation. So some of you in the room might say it's green or red, but I think there's winners and losers in any changing policy. And so at the moment I've got it as yellow. And I want to highlight just, change in immigration, change in trade policy, which matters especially to our farm family. Uncertainty about the farm bill, and the crop insurance matters a lot to our farm family. And another one I want to showcase there is the canceled contracts happening across the U.S. And I found a great map that really showcases that. In the Kansas City Federal Reserve region, the hot spot for that is Colorado, having the most canceled contracts, followed by Kansas. And that's why in Nebraska, we're not feeling that. I don't know any neighbors or people that have had contracts canceled, but that's a significant thing right now. Second trend, changing in geopolitics. This I have read, and it very much feels like a new era that we're entering, with the role of the U.S. in the world, and the role of U.S. agriculture. What is the role of U.S. agriculture in the world? With some, changing landscape and relationships with China, with Brazil, with the Middle East now. I had farmers who are now talking about the Strait of Hormuz and what's going to happen to oil prices. That farmers are talking about that. So that one, again, a big shift and a big red light there. Third one, extreme weather and climate continuing. And for us on our farm, we've experienced trouble with water, trouble with fire, trouble with heat. We now insure, so much more than we did when I was a child. And that's just one little indicator of that. I've got that marked as in the short term yellow, in the medium term red, because I don't think it's going away, and we have to keep figuring it out. Fourth trend, the change in farm and rural dynamics. Brandon laid that out very well. I think it's red, orange, and yellow. It really varies. And you talk to different farmers. That's why I said if you talk to my farm, we'd probably say green or yellow, it'll be all right. But the farmers I talked to at Farm Foundation, there are some that are red. They said their backs are against the wall. And I'll probably share more of those stories as we go forward. Population decline in rural America is another key component of that. That's why I said not just farm, but rural dynamics. I'm deeply concerned about that for my own farming community and farming communities across the U.S. And that's linked to that immigration piece. The core driver of population growth in Nebraska is immigration, and that is a significant risk and challenge, I think. Brandon covered the input costs and low market prices. And then for those like Krista who have cattle, that's a green. That's the one green. But I'll close with the last green. The fifth trend is the change in innovation and artificial intelligence. And in agriculture, it's kind of, I'd say like hidden, and it's probably not what most farmers are talking about because it's embedded in precision ag. It's embedded in the tools. But again, back to the landscape view, I just finished an executive education talking about artificial intelligence and how it is a paradigm shift and a new era. It's going to be like electricity, the finance sectors, healthcare, other sectors. It's really transforming them. And I think it's possible it can transform aspects of agriculture, but certainly in the Kansas City Federal Reserve region, I think it's going to change the economics of this region. So that's the green light I'll close with.
Great, thanks, Sherry. Appreciate the categorization there and ending with a positive note. Paul?
Thanks, Nate. Kind of the biggest trend that I'd highlight is the intersection of energy with agriculture. And context that I back up and look at is the development of the ethanol industry in the early 2000s. It existed before then, but it really built out, and the impact that has on U.S. agriculture today, with ethanol consuming 1/3 of U.S. corn production. Maybe bigger, maybe it grows, as you were saying, if the economics with carbon capture come to life. The preparation, I'll call it, for another big transformation coming at agriculture. I'm backing up a couple of years. Tremendous investment in oilseed crush investments. Tremendous investment from the energy sector in renewable diesel production, work on SAF production. And the ag industry, though, from my point of view, was really preparing for another transformative change, similar or somewhat in the same light of what ethanol has done to the demand on corn. And we need it because South America's ability to compete on the global trade is really significant. And I don't know how many years I'd have to back up, but I used to be really proud that we had the safest, most affordable food supply in the world here in the U.S., and that was a big competitive advantage. And that's not really the case today. And South America's proven they can compete. And so I think we've got to be thoughtful about demand creation. And you don't have to back up too far, where I think a lot of the investment in, I'll say, technology on bushels per acre, the agronomic side of things, was driven by, hey, we've got to be prepared to feed a growing world population of 9 billion by 2050. And how are we going to do that? There's not more acres. And those trends continue to be really positive. But today we have more supply than demand. And so you're feeling it. And so I think some of these short term, like finding new demand, especially for U.S. grain, is really critical. And so I do believe, though, we were on the path of that happening. It was coming from policy that was supportive. It was coming from, I'm going to say, every company in the U.S. This is an extreme, but everyone had an opinion on, I'm going to be carbon neutral by pick the date or some type of a program, because there was an obligation and responsibility that was being brought to life in a lot of different factors. Might have been directly from the consumer, if you're publicly traded, big investors that were just demanding programs and commitments for companies to make. And from an agriculture perspective, I think our industry, when it comes to stewardship and the environment and the climate, I want to raise my hand and say, hey, I'm really proud of it. We were getting beat up in some of those discussions like we were the problem. And while we're not perfect, I think there's the interaction I've had. I grew up on a farm, but stewardship was something that you learned. And I think I saw it in real life, and I believe it exists in the DNA of farmers today. They truly care. And I think they'll innovate. They'll be really thoughtful. They get excited about new things that can be good for the environment. But that push said, we've got to have a lower carbon fuel stream. How do these commitments, how are they achieved? And agriculture plays a really big role in that. And so they're being prepared for a lot more diesel, being renewable diesel, for jet fuel being sustainable fuel. And then the Blenders Tax Credit goes away December 31st, uncertainty around policy. It put us in kind of a no man's land. And I think we're at a stage where it's becoming a bit more clear. The EPA just ruled on volume RVOs. That's just a suggestion, but that'll take shape, and we'll have clarity on that here over the next few months, most likely. And so there's developments here, and I think that's one thing that I'll maybe just wrap it up with is a theme around not necessarily a trend, but uncertainty in what that does, and really high degree of uncertainty. And I think we have more certainty today than we did 3 months ago or 6 months ago. And I would predict that we'll have more certainty 3 months from now and 6 months from now. And when I say more certainty on trade and trade flows and what the tariffs where do they really settle out at, and what does that mean on policy, on how does energy intersect with ag again? Not on everything, but I think it'll become clearer where people can then get back to the uncertainty and how it impacts hiring decisions, CapEx decisions. So many things just kind of get put on hold. I think there's signals that say some of those things that were really just locked down on hold are starting to loosen up a bit. And I think as we get more certainty, people can kind of start to assume, okay, this is what this picture looks like. I'll start investing again or make more permanent decisions because there's more confidence in the assumptions that you're making to do those things.
Paul, you touched on a couple topics that I'm sure we'll come back to here as it relates to global demand growth and factors that are driving that, concerns around trade, and you mentioned uncertainty. So those are some topics I'm sure we'll want to come back on and visit a little bit more about. But Krista?
Yes, and thank you to all the panelists who did a very nice job of laying out all the issues that are affecting our trends over the next 5 years. And so I think all of that from an ag banking perspective comes to continued consolidation in agriculture and the impact that has on us as community banks, as the producers continue to get larger. And this has occurred prior to the economic downturn and only will increase with this, but it's also taking out the economic standpoint that we have seen in recent, just the age of the producer and the opportunities to transition, just as Brandon shared, the increased cost of production, cost of equipment, and how to bring those other producers in to keep our communities vibrant, with a diverse group. There's also the concern, as these get larger and with the economic downturn, real estate has been a shining spot for us in agriculture for quite some time now. And so, as there are increased sales, what does that look like? It's all of supply and demand. So that is something that we obviously look at as a trend that we need to watch as an ag bank. I think there are opportunities for innovation with these trend of consolidation. We've seen niche markets developed. We've seen direct to consumer beef businesses develop. So it'll be interesting to watch how that changes and how that can be a larger picture for more operations. We have seen on the cattle side, obviously, like they shared, very positive. And the importance of protein to the American consumer has really increased over the years, over the past of recent, into our younger consumers. So that is something that I think we have to keep as an important part that is positive for all parts of the agricultural industry. But beef is not immune from this consolidation either. I think we have to be very cognizant of the ownership of ranch land and corporate and foreign ownership and what that will look like as we are at the lowest level of beef cows in, how many years. What does that look like when ranch land sells? And even with these prices, it still is not able to stay as in production. So while we're at a strong point right now, I think that is something that will be a trend we have to closely monitor. So thank you, Nate. Those are my thoughts.
Yeah, thanks, Krista. We wanted to start with some open-ended questions, but I'll invite others to offer any follow-up questions here, and we'll just engage in a little bit more of a free-flowing discussion. And I'll kick off with one, and then others can feel free to chime in as well. Paul, you touched on the element of uncertainty, and I'll maybe start with you. If you could just offer some comments about how you've seen uncertainty affect your business. And then I might ask others to weigh in on the same question, just to the extent that you've observed some changes in uncertainty and what that means from a practical perspective of how you go about making business decisions.
Yeah, the biggest driver of that, like kind of in the real short term here, is the tariffs. And we ship a lot of product, Canada to the U.S., Mexico. We're one of the larger shippers of containerized product from the U.S. out to Asia markets. So and the rules of the game change suddenly. You have to have flexibility, but it really impacts, well, what assumptions do you make if you're either buying from Canada and bringing it into the US, or you're making sales into Mexico? That's very, very, very disruptive, right? And then it's about mitigating risk. But at the same time, customers, are they going to assume all the risk if the degree of uncertainty is so great? On the global stage for demand, whether it's South America or the US, and to have the types of numbers that are implemented and then they're on, they're off, it just creates chaos. I mean, we went through a really rough stage, and it's not just agriculture, but just trade, trying to figure out, where's the dust going to settle and what does this mean? But when you're in that period of time, it takes you away from thinking, what am I going to do to grow my company? What am I going to do to, what are my hiring assumptions? I mean, everything in your business just kind of gets slowed down. And so when my earlier comments about, I think we have more certainty today than what we did, and I think it'll only get a bit more clear as we go forward. The China agreement is like, hey, there's something out here, but nobody knows the details yet. Getting clarity on that, and then kind of saying, okay, well, this is the path forward, will be really important. It'll be important to agriculture, getting clarity on the renewable fuel volume obligations, where you can start saying, okay, well, now this is the rule of the road. Is it through 27 or is it through 2031? Because, all those things, there's so many big elements that impact U.S. food and agriculture that we're dealing with. The other thing I would say, the kind of a little bit away from ag, but the shipment of products into the U.S., there was a big bubble, right? Of so many of the products coming from Asia in, and they're resuming. So you just think of the container flows, and so when it comes to then, how does that impact inflation? What do we see from inflation in the economy because of tariffs? Maybe it's a little bit moderated because things didn't ship, they stopped, because the the thing flipped on a dime, decisions, hey, we're going to go to 145% or whatever. Now we're back to 50. It was just such a quick roller coaster ride that all of a sudden it's like, okay, now we're shipping again. But they held off, and all of a sudden it's coming back. And so, did a lot, how much product actually came through at the peak of the tariff? Maybe not as much as a normal flow of consumer goods. But anyway, I think I'd love to hear others' perspective, but the uncertainty topic and the impact that has on companies, and a lot of our uncertainty in our business in particular was driven by tariff and trade, because these flows, you count on them, and all of a sudden as that goes away, it definitely has impact on price then back to growers one way or another. So.
Yeah, Sherry, I know farmers are not strangers to uncertainty and just things that might come through the year. So have some thoughts on that.
But I was going to wade in the waters because this is another example where our farm perspective is different than the landscape view of the farmers at Farm Foundation. So in our farming operation, we're not looking to grow right now. We farm about 4,000 to 5,000 acres, and a lot depends on if we have a sixth generation and what that growth mindset would be. But as I looked and talked to the farmers in Farm Foundation, who are leaders, who are innovators, who are highly successful, and most of them 100% dependent on ag for their income, I was really taken aback, actually, by the impact that uncertainty is having on these leaders and entrepreneurs that I admire, who are saying, we either feel stuck or we've just put an absolute hold on any investment, even though they would be the first ones to invest in the past. Another one who said, I just feel like my back is against the wall. I almost like soaking up from the neighbors as well, and just not wanting to be the one going out doing stuff when the neighbors are really struggling, and being part of the community. And a few of these farmers I'll share more stories with, because it just really almost, I'd say, unsettled me to listen to farmers. And this is across the country also, which is disturbing to me. Again, sorry, that's red light, I guess.
On the uncertainty thing, I was thinking about through the trade, the tariffs and all of that. And part of what the challenge has become when you take it back to the farm level is that, if you look at a farm, you just take the average farmer, if they're a 50-50 rotation, corn, soybeans, what do they want to grow? They want to grow GMO corn, GMO soybeans, make life simple. Well, now you start having some of your key markets saying we don't want genetically modified corn in there, especially when we're dealing in our area with white corn and some other things. So what do we do? Today I made the decision to grow 300 acres of non-GMO white corn next year already, so they can ship it into Mexico. They've got the market. But when we start talking the uncertainty of what crops can I grow based off technology, throw on top of that the uncertainty of what's going to come out of the EPA, regarding crop protection products. Then you throw on top of that the uncertainty of things like Omaha, and how does this reshape agriculture? Could it reshape agriculture? Are we going to have to there's a lot of uncertainty right now. We're getting some clarification on trade and some other things, which is really, really good. But whereas farmers going, I don't know what to grow. I can turn into ethanol, but what does a byproduct go into? Are they going to have a problem with me shipping DDGs that are GMOs somewhere else? So there's a lot of that uncertainty out there that does play into what Sherry's talking about, farmers' mentality. But how does that play long term in making business decisions? Do I want to expand, or am I just hold back and say it's not worth it right now? Whether I have next generation coming back or not, or what's going on in the community. So there still are those things that we don't really talk about, because a lot of times we don't think about them as the whole. We're just thinking about them as individual pieces, like, oh, what am I going to do on this farm? And then you realize it all goes back to uncertainty at a greater level.
Chris, I might ask you to chime in here, but I'll maybe motivate it a little bit, and then anyone else can feel free to comment, talking about uncertainty and just some of the difficult economic challenges as it relates to profits, specifically in the crop industry. And maybe to take a lending perspective on this, what do some of the conversations look like between a lender and a borrower when it comes to assessing what those financials look like, and then ultimately disseminating credit? If you could give some insight into that, and then I'd be curious the farm perspective on that as well.
Yes, uncertainty obviously has had a major impact on our ag borrowers and those conversations. And, overall, our ag borrowers are not, I mean, they're sitting on the sidelines in these. So what we are mainly discussing is their current situation, and it's not for expansion. It's unfortunately how to make adjustments for this upcoming year. We've seen, a massive outflow of liquidity out of the agricultural industry over the past years, and how to adjust their balance sheet, how to make changes to sustain is more of that discussion rather than the expansion at this point. So really just sitting on the sidelines, and that has, that impacts also depending on financial condition, because like what Brandon said, when the communities are hurting as they are, I mean, that just overall changes everyone's mindsets. Also with, it kind of takes almost more of a protection approach, to it. Despite cattle feeders having improved profits, you're still, that overall landscape is impacting that. Looking at their balance sheets and those conversations, off-farm income has continued to be more of a discussion. We're kind of back where we were 6-7 years ago in that regard. So looking at diversification, just other areas to bring in income is a major conversation that our lenders are having, I think, across the agricultural industry.
I might add one
Yeah,
thing.
Paul.
Were you go? Oh, yeah, I'm sorry.
Go for it. Go for it.
No, please.
I was just going to say one of the reflections as I listened across the panel is it's kind of going from uncertainty to clarity, as Paul said. But I think what a lot of people need and want is not just clarity. I think that's the first step, but stability in order to make these bigger investments. And I think that's the bigger question mark for many people. We had a long time of, the world was, globalization was for a long period of time, low interest rates for a long period of time, economic growth for a long period of time. We probably took for granted, but that sort of stability of that environment is like, yeah, entrepreneurs can, make those investments. And I think that's the big question mark is, can we reach stability beyond clarity? The other thing I was going to mention is, despite our name, a farm foundation, we're actually multi-stakeholder. So I really should talk more about other parts of the food value chain. So from a food company perspective, I think there's also a lot of disruption and uncertainty. And because of MAHA, as you mentioned. And so what else is going to change in terms of, red dye or which kind of fat is okay? And, that those are big, have big ripple effects for food companies. So again, back to both clarity and stability for food companies. And when we talk later about growth, the food companies were one of the core drivers for some farm contracts. So I think that's why it's a big concern also at the farm level for what's going on at the food companies.
I was just going to add one perspective a little bit, maybe for Governor Barr, but Russia invaded Ukraine and wheat prices went to over $12 a bushel. Today they're less than half that. So it's not, you don't have to go too far back where the picture in production agriculture was far more positive than what it is today. And then our role in the market. We're serving a lot of the folks on the protein side, dairy industry, and that piece of the food chain, I'll call it, is much more positive. So it's really, the grain production is where current prices are below cost of production, and that's where you feel kind of that negative sentiment the most. But the positive sentiment is really on the protein production, dairy production, grain processing is a more positive look. And I just maybe a little bit of, we don't want another, I don't know, the next Russia-Ukraine invasion. We're not cheering for that by any means, but it is amazing what can happen when there's a disruption on the global stage. And we didn't really talk about it much, but if you think about the word geopolitical and where are we at there, that adds to that uncertainty. It's kind of amazing. What is today, Tuesday? It was Saturday night where we had some really big news for the world, and things remained relatively calm, across the globe and across the economy, just kind of the market reactions yesterday. And I don't know if that is complacency or maybe just a level of confidence. I don't know what I don't have an answer on it, but it's just kind of an observation for me that like earlier in my career, an event like that would have had really extreme reactions in the markets, especially agriculture markets and or energy, maybe on the oil side, and we navigated it pretty quietly so far.
Brandon, I'd be curious your thoughts. What are some of either the farmers that you would interact with or your experience as it relates to credit and borrowing? Maybe take us into the room of what some of those conversations look like, recognizing some of the uncertainty that they're thinking about or that you're thinking about as it relates to decisions for your business.
You know, I think Krista summed a lot of that up well. And I think what the challenge has become is you're starting to hear stories widespread of people, either the bank telling them they're not getting credit, they're going to kind of mow back. You know, it's not just small, you know, it's not just this localized area. Like, okay, we could see it in a localized drought situation, you know, multi-year challenges going on. Okay, we've got a problem, but it was different people talked to said, we're hearing this. This young farmer's not able to get credit. This isn't going on. And, you know, it wasn't vast numbers, but it was enough numbers that it really caught my ear that, okay, there's something not good going on when we look at the farm economy as a whole. So what does that mean? You know, talking about, you know, we're raising crop below the cost of production. That was our decision this year. Which crop am I going to lose the least amount of money on? And it's been a long time since we've had that conversation. Like, all right, I've ran these numbers and, you know, to break even, I'm going to need beans to raise 100 bushel soybeans. We've never done that. And that's not going to happen in South Central Nebraska. So how are we going to, what are the changes we have to make? What are those other areas we have to look at? You know, so I think there's a lot of those conversations going on. The challenge becomes is how do we not so much remedy it, but get people talking about it just so there's more of an understanding of what's going on out in the rural community, especially in farming community, because, you know, farmers aren't going to go down to the bar and tell you, hey, you know, the bank just cut me off. They're not going to do that. You know, it's usually happenstance of rumors, and usually in those cases, rumors are usually true, but it's become a challenge. And yeah, so it's just stories we're hearing, and it started popping up 4 months ago, which was not necessarily good.
We're fortunate to have with us Governor Barr and President Schmid, who of course both participate on the Federal Open Market Committee. And Governor Barr, your comments earlier about the role of short-term interest rates being the primary mechanism as it relates to monetary policy. And so I guess I'll turn to this next portion of conversation just to ask for any insights that you could offer as it relates to the impact of interest rates. How do you think about the level of rates as it informs decisions that you're making with respect to lending, investments that you're considering, or even longer term types of questions that might be influenced? To what extent are interest rates factoring into your decisions at the moment, alongside many of the other topics that we've already started discussing here? And I'll ask whoever wants to chime in first on that one.
Okay. Obviously, you know, yes, interest rates impact us every day. I think in the community banking space, primarily agriculture, but across all of community banking, you know, a lot of interest rates are adjusting right now. You had 5-year adjustables on real estate loans and whatnot, and the impact that is having and will have on our customers. Obviously, there's, you know, when you're looking at those had 3s in front of them and now you're going to be a 7, you know, that impact that is going to have, I think, is something that we have seen over the past year and are going to continue to see. So that is just the first thing that comes to my mind on that. And that also is, you know, just on their looks on other investments for, you know, whether it is a customer that is looking at purchasing land or whatnot, you know, when we're looking at the interest rates that we are, there's a large impact, even in cattle feeding. You know, $100 a head is going to interest. I mean, you have to look at what other investment options are available for them. So despite, you know, we're looking at a sector that is strong, interest rates are having strong impact on everywhere. So
Yeah, Paul.
I would just describe our industry as it's a high volume, low margin industry. So interest rate sensitivity would be, I think, against maybe some other industries would be high. You think of the crops that you grow, you're harvesting them once a year, and it's got to last through the whole till the next year, right? So you're carrying that crop one way or another through the system, and honestly, I think the system felt it, not just Schooler, but we were at cheap money for a long time, right? And you kind of get those muscles developed and you're used to it. We had people that, you hire them out of college and that's the only thing they knew. And all of a sudden, they're 3-4 years in, and all of a sudden, hey, you've got to calculate this a little differently. You've got to think about what it costs us to carry inventory forward. And so it was a pretty big adjustment, frankly. And I would just describe it as, from an industry, it is, I view it as we're really sensitive to that because of the nature of it and carrying the inventory forward. And I think things have kind of caught up where I'm even thinking of the variable storage rates that apply on, if you're delivering grain, all those things, those adjustments have finally kind of made their way through. But it does have an impact. That's more on the just tactical execution of the market. And then the other thing that's related to just CapEx and new investment, I think we'll see investments continue in productivity, efficiency type of things. But from my view anyway, we're a buy versus build. And that might be more of an inflation of what's happened since COVID. But it's also very sensitive on interest rates. And I just think the backdrop would be like projects of something that we did 5 years ago and what that same project would cost today. It's significantly different. Plus the cost of capital is higher. And so it does have an impact. So I would, at least in agriculture, I would look at CapEx being down and maybe you'll see M&A kind of pick back up a little bit because the math would tell you that you're better off buying versus building something.
Brandon or Sherry, curious your thoughts. To what extent do interest rates factor into the kinds of decisions that you either hear from farmers that you would interact with, Sherry, either through Farm Foundation or your farm as it relates to investment?
I'll trust that Brandon will go straight to the ag part, so I'll go ag adjacent with my answer and say one of the impacts is new home buyers. And so as you look at rural communities, the next generation of farmers, my own kids, it's a topic of conversation of will we ever be able to buy our first home, and when should we? How do we think about that? What's going to happen with interest rates to drive that? And Farm Foundation has a beginning farmers program that we just stood up with PepsiCo. If you saw the potato farmer ad at the Super Bowl, it was very fun. And we're trying to have 300 beginning farmers enter that program this year. And just think about the decisions that they'll be facing, whether it's the cost of land, the cost of the equipment, first-time home buyer, all of those things collectively. Wow.
I think the interest rates do play a big factor just for any of our decisions in agriculture. First, I'll start at our farm level. As my brother and I have had this conversation, we have a bin site. We can store, roughly, we'll just say half our corn crop if we want, maybe a little more. And our discussion was, what are we doing storing corn, holding it for the next year? So we already have an operating line we're paying interest on, and now we're going to gamble more or less with that price is going to go up at the same time. So the price of the crop has to go up significantly higher just to cover that interest cost. So this makes no sense to hold on to this crop. It makes more sense to get rid of it, pay down the line, invest the money somewhere else than it does to store, which goes completely against every reason we have a storage facility. But it's like these are the decisions we're thinking about. And as we were talking, in any small farming community, everybody knows who buys new equipment. You always know it. And I just realized as we're sitting here, I just went to the mental math, and I'm like, I think I only saw one new planter roll out this year. I didn't see new tractors, not seeing new combines. So guys are sitting on the sidelines. They're going to hold them 2 or 3 more years, and which becomes a bigger challenge because of the technology changes within the equipment. It's not as simple as what it was 30 years ago of working on them. So it's like, great, I can hold this tractor for 20, 30 years, no big deal. I can weld on it, I can fix it, I know what I'm doing. Now it's, you also add in the cost of having somebody come out and work on it, because I can't do it just because of the technology inside. I can do the basics. So we're starting to see that subtlety in there that we're not seeing what we saw 5 years ago of new just rolling in on farm after farm after farm. The really big guys maybe are, because they're rolling equipment every year. But I hadn't thought about till just now that we're not seeing that. And that's probably a key indicator that guys are just holding back.
Yeah, and I imagine that is a different environment from what you would have experienced 3 or 4 years ago in terms of new orders for those pieces of equipment and maybe what you were seeing then.
Yeah, most definitely. We would have seen a lot more moving out. It's just, there's stuff sitting on, there was a piece of equipment I've been looking for. And when I look on the dealer's website and it's a used model, and now I realized, wait, I looked at that same model last year, that exact same piece of equipment, as we're trying to figure out if there's a change we want to make. Things just seem like they're not moving like they were. You can drive by the implement lots and they're the same stuff over and over. Like nothing's changed. This is odd.
I'll maybe turn to another topic that is quite close to what the Fed thinks about as it relates to monetary policy, specifically in discussions about the Fed's dual mandate, is to spend just a few minutes talking about labor. And I know there have been some comments already, but curious if you could offer some comments on what your experience has been, maybe over the past 5 years as a starting point, but then what you've experienced over the past few months, and to what extent are you starting to see signs of changes in hiring, or are you seeing new applications, or is that starting to change at all for those positions that either you're trying to fill or maybe that you're hearing others talk about? What changes are you seeing with respect to labor on the farm or adjacent to the farm?
We have a lot of facilities out in rural locations, but our headquarters is here in Omaha. And so there's a little bit of a different story. I think even if the country experienced much higher unemployment, we'd continue to have challenges with finding available employment in the rural areas. And it's kind of what you were talking about, just the population isn't there. It's not as robust. I've got a theory. I grew up on a farm, and what it took to run the farm 50 years ago versus today is very different. There's been a lot of automation, and what I remember as baling hay isn't the same as baling hay today. It was a lot of manual labor. So folks have moved, and so then if you have operations out in those rural areas, it's a challenge. And I think that challenge is a little bit differently defined versus, hey, what's the economy doing? Just on the numbers. And I think here in Omaha, it's a bit of a different story. And where we see it is job openings, like job applications. The number of applications that come in per position that's posted has really significantly increased. And so, Jeff and Nate and Joe, they know this. I've been talking about it. I keep waiting for the unemployment numbers to kind of show up, a little bit of that anecdotal that we're feeling, and it really isn't happening. And so didn't quite know what to make of that, but I think the anecdotal around college graduates and some of these things, it speaks to a bit of a softer labor market, but it's not showing up in the numbers yet. That being said, I think the rural side is going to continue to be a challenge, and a lot of different things we do to try to get people interested in it, exposed to it. Because I think it's just something we're going to continue to solve. And then I think the investment in productivity is also, we'll continue to look at it. If we can use robotics to open and close rail car lids instead of people doing that, it's the least favorite job that we have. That type of investments that we'd make.
As a kid that was allergic to hay, Paul, I'm actually glad to see that some changes have happened with respect to baling hay over time. Other thoughts on labor and what you're seeing with respect to just trends there?
I think one of the challenges is the gap between the readiness of automation and how widespread it can be used in all the aspects of agriculture. And in California in particular with fruits and vegetables, maybe it it's not quite ready for prime time to take the place of all the immigrant labor that was there. So I don't know, again, back to AI, if AI can close that gap faster, that would be great, because I do think the labor problem is a long-term problem, especially acute in rural America. Some of the farmers I talked to said, they are hopeful for the H-2A program, but even this year, the changes with the H-2A program and those who follow the rules and played by the book and then felt like they were penalized by doing that. And so I thought that was interesting to hear. But then anyway, I think they're feeling like it's probably on a pathway that it'll be all right with the H-2A programs, but some of the other programs less clear.
Yeah, I think it was mentioned earlier, the average age of the farmer obviously is 58, 59, it keeps going up, and so does the average age in the small town. So we're in this really interesting mix where we have trying to find people to work on the farm, especially during harvest, like planting season, some of that we can manage on the farm. But when you get into that, the hard time of harvest where you need people driving trucks, and luckily in Nebraska, we've changed some of those rules. So you don't really need a CDL if you're driving a farm truck. But trying to find somebody who can at least drive it is a challenge. So, going back to when I was a kid, there weren't that many semis. So you could put some 14-year-old in a straight bed truck and haul grain to town. Nobody thought anything about it. Well, now you got to be 18. There's different parameters in place. So you can't just put anybody out there. So that becomes a big challenge. Who do we find to drive the trucks without having to go through a visa program? Who's around, who's available. There's some changes within robotics there that there's some automation with grain carts and some stuff, but it still requires a person in there at the end of the time. So that becomes a huge challenge as we're moving forward. And if you're a really large farm, can you keep those employees there? Because they're running, some of those guys, we know what hours they're running, and it's insane because they have to do it to get the acres covered. It also reminded me of somebody I was talking to that has a feedlot. We got talking about them trying to figure out what they're going to do labor-wise on the farm because the visa cost had gone so high. And it was like, and it was one of those, do you start reaching out into the local community, the bigger town that maybe has that has a packing plant that are now on their second, third generation, or the newer ones that want to get out of the packing plant? Do you reach into them and say, hey, you're acclimated to the Nebraska winters. Do you want to come work here and be able to do some of this? But, they're having just as many challenges as we are. And I only see it getting worse because there's just some of those things that we were able to do 40 years ago that we can't do now, right or wrong, because of safety regulations on some of those and just because of sheer size. You can't just put an average 8-year-old in a small tractor and have them go try to bale hay because we ran into that. My wife goes, why aren't you putting the one of the boys in the tractor? I said, that's a 450 horsepower tractor that no, I'm not putting him in there. It's a $500,000 tractor. I'm not crazy. I trust him, but not that much. So, there's those challenges as well.
Krista, I know Wisner is a small town, about an hour and a half or so north of here, and as a small town, maybe struggles with some of the issues that we've talked about here with labor, but curious what you're seeing there at the bank.
Yes, from the bank perspective, recent hiring, we have seen more applicants than we have over the past 5 years. So we definitely have seen that in recent openings. Just overall, I would say more stability as, maybe the work from home options have lessened in our rural communities. So kind of bringing some back into the market there, and also maybe not the options from fintech and the other areas that hiring has declined. So overall, we've seen an improvement in that. But in our rural communities, we face the same thing, especially, on frontline staff, customer service, whatnot, just, as just a smaller population base and less interest in those areas is a challenge. Overall, like the comments that Brandon shared for ag producers in our area, the same thing, just increased efficiency just has meant that it's just more cyclical, seasonal, the labor force that's needed. But we're fortunate being in Cumming County, strong agricultural area that is just ingrained in our communities. So probably face less than other areas because of that, because of the cattle feeding industry.
You've all commented a little bit on the rural piece of this, which in the Kansas City Fed District, we talk a lot about agriculture, but part of that is because we are a concentrated rural region. And as a rural part of the country, agriculture is an important industry. It's of course not the only industry in rural places. And we've touched on some topics that have some relevance for small towns that might be important. Krista, you mentioned off-farm income as an example. So having access to jobs in a local town matters quite a bit. I'd be curious your thoughts, and this would be for anyone on the panel, as it relates to issues that you see evolving in rural places that you think would be important to voice here. What sorts of other factors, maybe even slightly outside of agriculture, that you would see in your rural communities, recognizing that Nebraska, of course, is a relatively rural state, but that we also have you all representing areas of the state that would be quite rural. What are some of the issues that you see surfacing, some of the economic issues that you think are important for those rural places that you represent, that are an important part of this discussion as we think about agriculture being an important industry in those locations? Yes, Sherry.
This has to do with attracting the next generation back to these rural communities. Even in our farming community, you need access to healthcare. I think I've said actually in the same place that you can't have a baby in our county. And that's weird. You should be able to have a baby in the county. What I mean by that is the cost of insurance. The insurance is so high and the volume of babies is so low, it doesn't pay to have the insurance so you can have a baby in our county. So access to healthcare, access to the education, access to the kinds of things you want to live and work there in terms of the restaurants and so forth. And one thing that I'm really watching right now at Farm Foundation, we were talking about what needs to be done for rural America. And I'm watching Iowa and the proposal about consolidating counties. I just think that's really interesting to see. We've talked about that. Is that what it's going to take to create more vibrant communities, to consolidate counties so that you don't have to fragment the resources? And so that's one hopeful thing. We'll see what happens. The politics, of course, of it are a whole different thing, but the economics could be good.
Other comments on just what you see happening in terms of rural economics in the places that you represent?
Yes, I think, a major impact I see is, in the 2005 to 13, 14, we had a huge influx of young producers return to the farm and, has had a huge impact on our communities, our schools and whatnot, the vibrancy of that and the impact that has on our local businesses. And as that generation is now having children that are high school, whatnot, and looking at their future, what will that look like for them? Will they, be like our past generations that, went to college and whatnot and had no thoughts of returning to our rural communities, or will they have the opportunity to return? So I think that will be very interesting to watch as we watch this economy, because our rural communities had a huge shoot in the arm because of what has happened in that time period. I mean, our hospitals, whatnot are there because of that population and have been able to thrive. But what does that look like beyond that? So that's something I would like to watch.
Yeah, Paul.
We opened a new crush facility, or existing, but we brought it back online in Goodland, Kansas. So small community. So, a challenge with that is, finding the people. Then for them, home ownership. We have places where we've actually just bought a home to have, in really, really small places where we have a grain elevator that might have 200 or 300 population in the town. And you do it so that you have something available, because you're trying to move somebody in to manage it. A lot of times they can't live there, and you really want them in the community and active in the community. So home ownership is a big challenge. And I'd echo what these guys said about healthcare. Necessity is the mother of invention, but a lot of mental health, telehealth, then services. So we've really tried to make that more available to employees and families. The strain on those local hospitals with their costs going way up. So most of them are operating in the red, and they don't have the wherewithal to make it through. And what do you do if you're living out there and you want to start a family, but you think about your safety and do you move so you can actually have your baby? It's your 90-minute drive to, if you go into labor. I mean, there's some real challenges that are, that would impact decisions. And so I think the answer in that is, you've got to be really thoughtful. How do what steps can you take, and how do you be thoughtful about, keeping communities vibrant? Community banking is so important. There's so many different elements that we spend time talking on. But being an employer or being in these communities, we've got to continue to have those discussions, be thoughtful about that.
Brandon, I won't quiz you on the population of Giltner, but I'm curious if you know it, you can share it, but paint a picture of what this looks like in terms of the rural outlook and some of the issues that might be surfacing there.
Yeah, Giltner's about just shy of 400 people. So, we've stayed kind of the same number forever, but it's a great question, because I was thinking about this from the standpoint of just the conference that our high school's in. We change conferences. So I've gotten to see two different perspectives of agriculture in those two conferences. So the one conference that we left out of, I would say was towns that are either growing or really trying to strive to be better and bring people in. Conference when now most of them, if we have that conference in 5 years, I'd be shocked, because I just think we're just seeing that decline because we're farther off the interstate. We're not up in the northeast part of the state where, you got cattle country, you got some things, but you guys also have consolidations of schools going on. Southeast Nebraska has consolidation of schools going on. We're in the spot where we're going to have that going on because there's not kids there, and there's population. Population's gone down, maybe, or stayed the same, but it's people who have never left. And so what we're starting to see is what's going to happen when we start combining these school districts, and how does that affect the overall, are people going to come back then? Are they going to come long term? But on the positive side, I feel like I've been negative, and I hate being negative all day long. But there's, we had the Costco facility come into the Fremont area, and that brought a lot of young people back. They're proposing Costco 2.0. And where does that go? And how does that bring people back when we have to have more chicken barns in a farther reach than they currently are? At the same time, we're working hard. We, meaning some of the groups that Nebraska Corn's involved with, are trying to get the dairy industry in here. How do we move them out of California, out of Idaho, out of Oregon, and get them to Nebraska? How do we get them in here? We've got the water, we've got the corn, we can grow alfalfa. We know we can do that. How do we get them here? At the same time, we're trying to get the cheese manufacturers here who want the dairies, but the dairies want the cheese manufacturers. So we have this chicken and the egg going on, but we're making strides, and there's expansion going on. So there are a lot of good things that they're just sitting under the surface. And if we can get one of these to happen, I think we bring young people back to the farm. We keep those small towns vibrant. I mean, there's nothing we can do about property taxes. They're terrible. We understand that. And that's what most of the time farmers are going to complain about, is property taxes. But that's not what's driving people out of the small communities. It's the lack of opportunities, the lack of healthcare. Early on, it's probably the lack of, being able to have high-speed internet, which I never talk about because we've had fiber in my house for like 10 years. So we were blessed with that. But, there's these challenges out there that I think we can, with some right modeling in place, we can make it work. It's just that we're seeing this decline that is problematic, and sitting on the school board trying to figure out what we're going to do in the next 10 years is a challenge, and I'll put it this way. Our base of our school is not very big. Like, if we just shut down every kid that wanted to come to our school in Giltner that was not in the Giltner school district, it's like 100 kids, 120 kids, K through 12. So 60% of our student population is coming from outside our district. And so if we shut that out, we shut down the school. It's a lose-lose situation. And so there's all these challenges, but there's a lot of opportunities out there if we can just get the right things moving.
I want to ask a question in a minute to ask about any topics maybe that haven't surfaced here yet. We use this Fed Listens as a way to just gather input about what you're all seeing, and to the extent that we can, try to ask questions that we think are really the right and relevant questions, but recognize that you may have some topics that didn't yet surface that would be important in doing that. So I'll ask that question in just a second. Before getting to that one, though, I did want to ask about the other side of the Fed's mandate for just a minute as well. We talked about labor a little bit, and maximum employment being one portion of the Fed's dual mandate, and the other part of that being price stability. We've had one challenge lately at the Fed, which is that a lot of the data that we're getting in that's sometimes referred to lately as hard data still looks pretty good, but even here, some of the anecdotal or the sentiment-based measures are maybe a bit more downbeat. I'm curious if you could describe a little bit the sentiment that you might experience in the communities that you represent, or some of the other industries that might be adjacent to yours, and to what extent those might be related to that other side of the Fed's mandate as it relates to cost pressures and inflation. Maybe just offer some comment on what you're hearing or seeing with respect to sentiment in the communities that you represent.
I think overall, yes, it's had a, impact, and sometimes in our smaller communities where it takes longer for us to feel that impact. And yet when some of the adjustments are making is when we're seeing that. We are, whether that's in healthcare and pharmacy costs and whatnot, we're seeing that having a major impact on our small communities. Overall, also looking at, whether that's equipment costs. And I mean, an anecdotal evidence that I've heard is that, as Brandon shared, that they're not, no turnover in equipment, but that I'm hearing of dealers that are incentivizing their commission for their salespeople by just getting quotes out there. So rather than getting a commission on a sale, they're getting commissions on just providing quotes. So you're showing that, that's to keep them employed. I mean, all across our supply chain input costs on the ag side, obviously that's having an impact. So in our smaller communities, it also, as grocery prices, whatnot, I think we're, again, slower to react. And so slower to make those adjustments sometimes. And so now, as that occurs, we're seeing, harder to keep people in our local communities, and are more, to go to the larger areas to see what the savings they can have. And so I think just kind of going back to the other question, as we talked about, how to keep our communities vibrant, for where our locations are, many are near Lincoln, Norfolk, Columbus, and we have those other employers. And going back to the off-farm income, I think it will be critical for us to be able to partner in those rural communities, that they have those opportunities, and in somewhat are a bedroom community. So being diversified has been critical for us to bring people back and give them opportunities. And yet they want to be in a small town. They want that smaller school or other opportunities for their children.
There's other comments on what you're hearing or feeling from sentiment, either Paul, those that you're interacting with, or businesses that would be part of your industry.
Yeah, I kind of feel like maybe we've hit a little bit of a low in agriculture, just from a sentiment perspective, right? The uncertainty plays a big role in that. Fighting with your biggest, kind of the biggest source of demand in the globe with China. You can bring those down into so many different areas. But if you start to get a little bit more declared there, for us, the impact of the RVOs, and that being such a positive indicator of demand growth, that changes sentiment in a hurry. You had reaction in the market on soybean oil right away. And it'll take time for that to get into the market. But what could impact prices? What could ultimately raise that price of grain above production? More demand. And that might not be corn directly, but you're going to have indirect effects of that. So that might be part of my opinion, where maybe we've hit a bottom and the sentiment will improve. And then the other is just, food and ag is, really, really broad. And so all the different players in it, there's the whole protein side is so much more positive. Dairy's positive. The consumer, buying food away from home versus at home, that's actually growing there's some things where consumers are, I would say, indicating a bit more optimism maybe than even sentiment I've shared with you over the past several months.
Yeah, no, and I'm glad you mentioned that, Paul. We'll, in the program that we'll explore later this evening and then through tomorrow, we'll take a little bit broader view of food and talk about some of those elements of supply chain as well, which is both, there's probably some positive elements, but also some concerns in that too. Sherry.
As you may know, 80% of farmers voted for the Trump administration. And so as I talk to farmers, they're now disagreeing with some of the actions, but still really optimistic about America and optimistic about this administration. And some of the sentiment indexes are now at the highest they've been for like over 4 years. And so that's why, again, it surprised me as I started talking to more of the farmers, and especially in Kansas, where they've been to this rodeo before and they said, you know, our backs are against the wall, our communities, their backs are against the wall. They went through the list of all of their input costs and they told me all of their costs by detail, and how they said, we're not going to be able to make our decisions. The bankers are going to be making our decisions now, and nobody likes that feeling. And he also shared about, you know, he grew up and his business has been handshakes. And he said, we're going to have to be careful not to do handshake agreements anymore because it's just getting bad. And he said, it's going to get worse before it gets better. So I know we've shared different perspectives, and it's good to have different perspectives here, but I think that's the challenge, is there is no one answer for ag. There are pockets, and I think there are some really bad pockets out there that it could get very worse, much worse than any of us would like to see.
Brendan?
You know, I think one of the interesting things, and I was taking off my hat of everything and the people I'm around that talk policy, that talk trade, that's sort of our lives, you know, we're talking those things. We live that every day. So we kind of figure out, we probably know more than the average farmer. Not that we understand it anymore, but there's a lot more that we realize is going on. I think a lot of the average farmers out there, they're not worried as much about what the trade policy is, how tariffs are going to affect them on the grain delivery side. As long as Schooler or whoever is buying my grain, I don't care. You know, as long as somebody's there to unload that, I'm okay, you know, and it's not until it really hits them in the face when it comes down to, oh, I can't make my cost of production. I can't pay that bill. You know, my cost of insurance is skyrocketed that I can't afford it anymore. So I think there's a lot of that just goes on, that they're just worried about each day and worrying about, is the pivot going around on the corn? Am I going to get this harvested? Am I getting the kids to their activities? You know, whatever the case might be, that I think there's a little bit why there's maybe this disconnect in some of this. And then when you really drill down on it, when they're finally open and honest of what's going on, then they're open and honest about what's going on, but they maybe don't understand why. You know, we're talking about at a really high level here. And I think the average farmer is not.
Good point. So I might open it up here for comments on topics that you feel like haven't surfaced here. Are there some things that you would say, if I had a chance to share some things with the Federal Reserve, these would be some important components that I hope you would take into consideration when it comes to deliberation of policy or discussion of economic conditions, whether it relates to labor and price stability in the Fed's dual mandate, or just other topics that you think would be important, risk factors that you think would be important to consider in the balance of those things. Does anything come to mind that you feel like would be important to share here in the context of topics that we haven't covered?
We haven't talked much about demographics. We've maybe hit on it a little bit, but I do worry about that. Just you mentioned the average age of farmers, but I think it's just when we think of the mandate of being full employment, and how does that impact policy? And what do you, if you have, we have somewhat of an internal speculation on, why are these beef numbers not rebounding? Part of it's price driven, but to what extent does demographics play? It's really, really hard work. And to what extent does somebody say, what, this is a good time to check out? It's good timing. And So I just I'd throw out demographics, and I think just something to continue to watch on specifically how it impacts our industry and from a policy perspective, how that all relates and what we can do about it. It's more of a thought than any kind of solution or answer, but.
And I think it's an important one, especially as we talk about rural economies and dynamics that could look quite different in rural places relative to other parts of even this region that we represent. Yeah, thanks, Paul. Sherry?
I would come back to AI again and how the economics of AI, and we've never seen something like this before. But just as I learn about some of the companies again in finance and health and engineering, I mean, big sectors for this region and other regions where, you know, some of the CEOs are saying, I'm going to hire 20% of the engineers that I used to hire, or I'm going to actually cut 80% of the engineers because I'm going to hire high schoolers who use AI. And it's just like, really? Wow. And then big pharma companies who are combining their HR departments, and it's going to be 3,000 AI agents along with 6,000 people. I mean, just labor isn't going to look the same anymore. And the org structures of all these big companies aren't going to look the same anymore. So that's got to be a tectonic shift in our economy coming up. And it's going a lot faster in different pockets again, but I think it pays for us all to pay attention to that.
Asked a subset question on that. You focused on these other sectors. How do you think it's going to affect the ag sector directly?
So I mentioned before, it's like hidden and embedded in precision ag and technology. So I think a lot of farmers don't see AI or don't think, oh, I'm using AI, but it's powering the precision ag or the automation of things. I think it could change the agribusinesses. I think it's changing R&D and some of the other parts of the ag supply chain, perhaps. But I think it's not going to be as obvious as in some of the other sectors. And I think it will also drive M&A. And we've already seen that with John Deere just acquiring Centera, for example. And I think we'll see in the consolidation of innovation, I think we'll see more M&A as well in ag.
Yeah, Paul, go ahead.
Well, I think technology has had a profound impact in the food and ag supply chains and production, and it will continue to do it. Schooler has a farm advisory board, and it was interesting listening to just the real life application of spraying technology and the impact that can have on their inputs and how much they use, because it's spot spraying instead of just broad application. And what's discouraging when profitability is down, there will be less investment on innovation and that next step. But that's really an unlock, I think, to it's cyclical as well in agriculture. So I'm going to predict there'll be a better day, in production agriculture than it is today. And even the areas where it's really positive, it'll be cyclical and go the other way. But I'm a believer. Like, my perspective on technology is going first for the Schooler company is going to change our work, and it's going to change how our work gets done. It'll change what our customers expect from us and how they expect it. It's all happening, and exactly how, I don't know, but I'm pushing my teams to embrace it, bring it in. Some of the discussions we had about just, learning and being really familiar and finding use case applications. There's a lot of manual things yet that can be automated. So there's opportunity that you can see. You just got to get at it. So I get excited about what technology can do. But you start thinking about robotics and all that, you start going, gosh, could it have such a profound impact that it would disrupt the full employment, right? And there's some really powerful uses, and we see it from legal to, I see Clark here. I'm thinking that you've talked about some of the applications. There's just some really transformational possibilities, and production agriculture is part of it, and the whole food and ag space. It'll look a lot different. And I think we talked about it earlier, but the pace of change is so much faster because the technology is just unlocking it.
Yeah, if we're talking technology, just think back 25 years ago, we didn't have GPS on the tractors, but when we talk about consolidation of the farms, that probably sped some of that up, because all of a sudden the tractor's driving itself. I'm just sitting there. I'm watching movies while it's driving. which I really am watching movies while it's driving. I'm not joking. But that scale of how fast they're moving and they're changing, I think is important to understand because to your point, there's a robot out there called the grain weevil that's going to keep people out of grain bins. Well, all of a sudden, if you're a schooler and you don't need to put an employee in a grain bin to clean it out, that changes that dynamic to the better. But at the same time, as we're talking AI, maybe I'm able to sit there and run the modeling and say, what is going to make me the most money this year? Besides me just doing it by spreadsheet, but let's run through a whole bunch of scenarios. Do I shift production in this area that I can finally prove that I should pull these dryland corners out of crop production because I'm losing money on them, 19 out of 20 years? What can I put in there that'll make money? We'll start shifting that to the better. So there's a lot of technology that I'm really hopeful on. See, there's a company that's turning soybeans into sensors. Sounds wild, but basically what they're doing is that plant will be able to sense that it has a disease about 2 weeks before the human eye can see it, but they're using John Deere See and Spray, drones, satellites to be able to see what's out there. So all of a sudden, maybe I don't need that gigantic spray plane going up, but I have a swarm of drones going out there that are just spot spraying. So there's just technology has me really excited. As we're talking here, what could be the challenges? Well, one is you don't have people in the small community, but you encourage young people who have that interest in AI and technology to come back and to be able to be in a small community. They don't have to be in Omaha. They don't have to be in Lincoln. They can be in Geltner, Nebraska, doing the same thing. And it's reshaping the agricultural landscape and maybe reshaping what we're growing in certain areas and some of that will be good. It'll be from my standpoint, because I can make money on certain parts of the farm that I will never make money on.
Krista?
I just want to add, kind of summarizing this, just the resilience and adaptability of agriculture at the sector producers and whatnot. I think all this just shows ag producers are resilient. They're going to use technology in a way to improve. And I think what I can see that our ag producers can use technology is to better use their data. I mean, they have had so much data at their fingertips that we haven't fully uncovered. So that's something that makes me hopeful for the future to improve efficiency and to just give them more opportunities. From an ag lending standpoint, talking resilience, we take a long-term partner approach with our customers. We appreciate the work at the Kansas City Fed, that has helps with that, looking at opportunities for our customers from a long-term perspective, whether that's diversification, whether that's looking at other opportunities, whether that's off-farm income, other enterprises like Brandon was sharing, the ability to be in our communities and have businesses that have reach throughout the country. We see that in a number of our communities that we're located in. Just continuing to look for other opportunities beyond the cost of production. So just wanted to add that just of the overall resilience, and I think those opportunities will continue.
I might turn in a minute, President Schmid and Governor Barr, to provide some concluding thoughts and some wrap up, or if there's additional questions, that's fine too. I want to make sure to leave one more space for a question around any risks that you think would change any of the things that we've talked about here. And some of the topics that you've introduced maybe have some elements of risk to them, demographics being one of those, and consolidation perhaps being another. Are there other risks that you feel would be important as you look at the next 6 months, the second half of this year, other risks that you think would be important in the context of a discussion on economics that are specific to agriculture or your industry or the region that you represent?
Well, I think we touched a little bit on, just policy in general, whether it's the Farm Bill, whether or not we get one, Omaha, anything of those that could totally disrupt this, if things don't happen within the biofuel space that we've been working on for a long time, if we suddenly have a step back there, I think all those could negatively, in some ways there could be some positives, but the positives are going to, let's say we're talking regenerative ag, that's a lot of cost involved to really get to that, and from the average farmer in a lot of areas. a shifting of some of that. You know, what happens, we keep hearing rumors of certain seed companies out there that may be up for sale, that are big players. If you start consolidating seed companies more and more, we only have 3 big ones as it is, 4, we lose one more. The price of my seed corn's already $350 to $400 a bag, so I'm putting $200+ an acre into corn just to plant it. If that keeps going up, what does that look like? Those are some things that are really short term that could really upend some things economically on our farms.
Other comments, risks that we haven't talked about? I know we've covered a lot of ground already.
The biggest one I'd call out is just geopolitical. It was such a surprise when Russia invaded Ukraine, and it had a really big impact for us here in the US. In that case, price-wise, a positive one, but it was really chaotic and disruptive. And I was at an event many years ago and had the privilege of hearing Condoleezza Rice speak. And she said, when big powers act badly, bad things happen. You've got some big powers, whether it's Russia, China. I mean, there's some really pretty significant uncertainty when it comes to geopolitical, and that's the reality. And kind of I ask myself all the time, when markets aren't reacting, is there complacency? Is there, what am I missing? But my concern would be that there is complacency, and all of a sudden something really disruptive could happen to our economy, something we just weren't thinking about. So I'd probably, if I pegged one that keeps me up at night, it'd be the geopolitical one. And then, trade, but I think that'll sort itself through.
Yeah.
I do have a closing comment. Should I wait or do it now?
I'll turn to Sherry if you had any comment on risks, and yeah, I'll come back.
Yeah, I just was going back to my red, yellow, green at the opening, and certainly policy is where more of the red and orange is, both, and I would say global, national, state, and local policies are a core risk. And to me, the antidote for many risks is innovation. And so, we're driving for policy innovation at all of those levels. Another one that we didn't talk as much about, again, is back to the weather and climate. And I think in Nebraska in particular, water is a big risk, both for agriculture and for our communities. In southeast Nebraska, the towns are trying to sell each other water, taking it from farmers and selling it to other communities. So I think that's a big risk for both the economics and our communities. But again, back to innovation as the solution. And if I can tuck in one more innovation, we didn't talk about like growth opportunities. As an entrepreneur, there are opportunities even in the worst of times. And so I'm always looking for opportunities, as is Farm Foundation. And I think there is a lot of innovation going on, not only in the technology that we mentioned, but in some of the new markets and new crops. In Kansas, Kernza was developed by the Land Institute. We're trying to help support more market demand for that and look for that. Hemp, I think some farmers went in and out of hemp, but what we're seeing now is like hemp 2.0 in terms of some other opportunities, blending it with soybeans. Paper straws are banned, but now there's a hemp soybean straw. So things like that. Again, I love innovation as the antidote and the hope.
Thanks, Sherry. Any other comments on Krista or Brandon? I don't want to cut off any conversation comments. So I'll maybe open it for any concluding comments here from any of our panelists, and then Governor Barr, I'll turn to you, and then President Schmid. Paul?
I wanted to maybe put a bit of a positive perspective. And I go back to COVID hits, I guess a little over 5 years ago, and just the highest degree of uncertainty anyone could imagine. And I mentioned a little bit of food at home and away from home. At that time, about 50% of food consumed in the U.S. was at home and 50% away from home. But the supply chains for food and ag are totally different. If you're supplying the food service side versus packaging and getting product on the shelf for consumers, and big picture, like all of a sudden you had to pivot and it all had to get supplied for food at home. And so huge credit to the resiliency of the agriculture community, the food and ag supply chains, because we kept people fed. And may not have been able to get your thick cut bacon, maple flavored bacon, but you got bacon, like whatever it is. We kept people fed it as an industry, And that's something I think that there's a lot of credit throughout the system for people being resilient and kind of to get it done. And I really think that's the spirit that I experience in food and ag that I'm proud of. And I think everybody on this panel would probably just be a reminder of. And I wanted to just bring that back. It's a bit of time ago, but it was, if you would have told people, hey, here's this challenge that we've got to figure out ahead of time and you had a plan for it, I'm guaranteeing 100% of the people say it's impossible. Like there's just no way you could figure it out because it was so much change in such a tight window of time, and yet people figured it out. So there you go.
Well, thanks, Paul. Let me add my thank you to the panel here. These discussions are important for us. We learn a lot. We will process and synthesize all of these notes to help inform the kinds of things that we should be thinking about and asking better questions at the Fed. But it's important for us to engage directly with you all in the businesses and industries in the regions that you represent as part of our district here. Governor Barr, I'll maybe turn to you next to provide some wrap-up comments.
Well, let me just say thank you again to our panelists and also to the audience here in the room who's been sharing with us and those who are listening in online. This kind of conversation is really an extraordinary gift. It's one of the joys I have as a governor is to be able to come around the country and talk to people and hear what's going around in local communities. You know, we live in this really beautiful and rich and diverse country that is so vibrant, and to be able to see that, you know, here in this community is just a great joy. So I just wanted to thank you all, and thanks again to President Schmid for inviting me to join you.
Wow, this has been amazing. I'm compelled to really relay a personal story. I think about how things change, and the more they change, the more they stay the same. But my grandparents immigrated from Germany in the late 1920s to Wisner, Nebraska. And they were sharecropper farmers. And all my dad ever wanted to be was a farmer in Wisner. And it's weird how life is, but there was a 2-year drought in the mid-50s, about a year before I was born. And had Wisner gotten raid in the mid-50s, I would have been a farm kid, not a city kid. But it forced my dad to go to Omaha to work. He started in the packing plant, and then he started in a mailroom of a bank. But and I do know my engineer's son, if he knew he could fly drones across your fields and drop fertilizer, he'd be back in Wisner tomorrow. So I'm optimistic, and even though there's challenges, but I hope what we can do is maybe even follow up, because I've actually got a bunch of questions that I'd love to get some feedback on, because I think this is important for two reasons. One is the whole monetary policy integration of this information is so real time and so important. But it also, I think, is going to enable a lot of our staff to start to drill into some of these issues. One of which I think is the convergence of demographics and AI. I think in a lot of ways I see that's as an upside. But thank the panelists. This has been rich. It's been deep. It's been meaningful. We'll also integrate it into some of our communication strategies at the Federal Reserve. And as always, Nate, you run a really great panel. So thank you for that. And thanks for everybody's attention here today. Thank you.
Well, thank you again. We'll wrap up here. Thanks to those that attended in person, and again, everyone that joined online, and appreciate everyone sharing their thoughts today. So we'll conclude. Thank you. As always. Yeah.